50% tariffs imposed. What is your view, Gajendra, on how these tariffs will impact the overall market sentiment?
But because there's no clarity, every second day he comes up with another statement, and that is what makes market nervous. So tomorrow, if it is pharma, then it can be a real big hit. And my biggest worry, I don't know how far it escalates. If it right now it is all limited goods space. Tomorrow, if it escalates to services also, Indian IT, then I think we are going to be very terribly hit.
Hi, Gajendra. First of all, thank you so much for taking out time on such a short notice. I think last we spoke was a year ago. And
Yes.
how are your SIPs? Are you still doing the 30 lakh SIP?
Yeah, absolutely. As discussed last time, it's an yearly ritual to increase my SIPs every April. So because we did in August and now we are back in August. So yeah, it has increased by another 10 lakhs or so. It's 41.2 lakhs right now hitting the bank
Oh
accounts.
wow. Oh wow. So I think that's the perfect note to start this conversation. As someone who is
Yes.
investing 40 lakhs or 41 lakhs of SIP every month in Indian market, and with the US tariffs, 50% tariffs imposed, what is your view, Gajendra, on how these tariffs will impact the overall market sentiment?
So see, Navda, someone like me who is a very long-term investor, these are blessings in disguise, I always say. See, unless markets are volatile, an SIP investor will never be able to create decent amount of wealth.
Hmm.
Because the whole purpose of SIPs is to buy the dips. Just imagine in an increasing market, if your NAVs are going up every day, every month, you're buying your subsequent investments at a higher NAV next month, right? So
Yeah,
if I want to take advantage of lower prices, then I want markets to go down for next 2, 3, 4 years so that I can accumulate a lot of units at lower prices.
correct.
And then eventually, when I want to redeem my money for my goals, that is the time when I want my markets to be on top.
Hmm. Right.
And I always believe, if you're suppressing volatility, you're suppressing your returns.
Hmm.
Somebody who wants to make money in equities, volatility should be your friend, not your enemy.
Hmm. Got it.
So days like these are an opportunity for long-term investors, patient investors like us who are doing through mutual funds. So not really going too much directly into stock-specific things. Because
Hmm.
if you see the tariff thing, it is hitting certain sectors like
Correct.
textiles to the core,
Correct.
maybe gems and jewelry, which are into exports. So
Hmm.
few sectors they are hitting, but it has become major headline news, and markets being markets, markets are sentimental in the short term. So everyone gets sucked into it,
Right.
whether you're impacted or not, but everyone wants to have a conversation around it. So a good investor should be able to separate the chaff from the wheat, right?
Hmm.
And see
So
how my portfolio is really impacted. More to us, it's more of a noise than the real substance on our portfolio here.
got it. But why I personally ask this, Gajendra, is because tariffs is something that is structurally impacting
Correct.
sectors, right? As you mentioned, textile as an example. So it's not a short-term volatility, but structurally things will change. Things, some exports will get expensive. So do you think there are certain sectors to look out for, and a retail investor, should they change their positions to more domestic oriented funds as compared to export oriented funds? What's your view there?
See, unless you have invested directly into only an export-related sector fund,
Hmm.
if you invested, and most investors would have invested in diversified equity funds in our country, right? Or normal sector funds, not export-oriented sector funds,
What
then
would
they
some
don't need
examples of export funds be like? Like, what are the sectors that you think will primarily get impacted with this?
prime. It's as of now, of course, there are quite a few, like as I said, auto ancillaries is one, pharma could be another, because the problem is right now the tariffs have no impact on pharma, but see, nobody can predict Mr. Trump, right? And we don't know where it will come. And markets, the challenge with markets is not worried about risk part. Market is always worried about uncertainty part.
Hmm.
Markets never like uncertainty, So if you tell on day one that this is the hit, and if everyone has digested, then I have clarity on this. But because there's no clarity, every second day he comes up with another statement, and
Hmm.
that is what makes market nervous. So
Right.
tomorrow, if it is pharma, then it can be a real big hit.
Hmm.
Okay,
Correct.
uh, because a lot of generics we export to US, and my biggest worry, I don't know how far it escalate. If right now it is all limited to goods space. tomorrow if it escalates to services also, Indian IT,
Yes,
then
I.
I think
Hmm.
then I think we are going to be very terribly hit because Infosys, Wipro, TCS, all of us, all of these companies has major exports to US.
Correct.
Then it is like blown into a full-scale trade war.
Fair.
Then I think not just export side, Indian sector, Indian domestic markets will also take a very big beating. Very
Yes.
difficult to predict, Navda, right now. I would say right now, I'm sure the fund managers who are managing our funds are also watching and they are all taking defensive position on our behalf. They
Hmm.
would have automatically done it, right?
Hmm.
So as an investor, right now, I would say don't try to become adventure right now.
Hmm.
Uh, Continue your allocation, everything. For some reason, if markets were to correct by 20% or more, we are right now maybe 5, 6%, 7% from all-time high. And it can take just a week or two for the markets to come to 15, 20% down based on such news. Someone like me will get more active when markets are down by 20%. Uh, of course, at that time, everything looks grim from long-term point of view at this stage. But I know this too shall pass, you
Hmm.
know. So someone like me would do lump sum when markets are down 20%, go aggressive and buy. And I'm sure, the reason why I will do that, because any such crisis is followed by any such immediate resolution also in that sense. The
Hmm.
moment any good news comes, markets again go up by 5, 10%, and it doesn't give you a chance to get back in. And a lot of people tell me, no, no, I'll sit on the sidelines. I'll not invest right now. Let me get some clarity.
Hmm.
I always assure by the time you'll get clarity, prices will not be on your side. It won't be a cheap bargains for you. Only
Right.
because there is no clarity, you're getting throwaway prices. So if it is 20, 25% down, lap it up. But
Fair.
someone like me, Navda, will never go on stock picking because stocks may go down by 50%. And, even from 50%, if you bought it, it can go down by another 50% from there.
True.
So I would caution other investors that mutual funds become better to let the fund managers see the real impact in on each balance sheet wise.
Hmm.
We are
Fair.
all very peripheral investors, when it comes to investing. Most people, they don't read the balance sheet, they don't know how much component of that textile company is going to US as exports and
Hmm.
stuff like that. A fund manager and his research team knows about that, so let them do the work.
Right, right. And I think very, very fair point here, Gajendra, ki while we feel all anxious when markets fall 5, 10, 20%, but if history is any example, COVID recovered, 40% crash recovered in 6 months. And uske baad se to we've been seeing even, even Russia-Ukraine war also couldn't
Yes.
impact markets more than 5, 10%. So, markets have also become
In fact,
resilient.
just imagine 2 months back, the whole thing was focusing on Iran, Israel.
Yeah.
A month prior to that, we were focusing on India, Pakistan.
Pakistan, yes.
I think those were far bigger issues that we were tackling at that time.
Hmm.
So I think this too shall pass. It's a very fleeting thing. Another month or two from now, we'll have another problem to grapple with.
Right.
So I wouldn't put so much kind of weight behind it.
Right. So, Gajendra, we spoke about textiles and pharma as goods export that have heavy dependence on the export, and if it applies to services and IT as a sector, are there certain sectors, which might also benefit from this? Any view on that?
So I think of course, India is talking to other countries also parallelly, Brazil and other BRICS nations, China and Russia. So I think India will certainly try to mitigate whatever losses it has to offset with other countries. Uh, and of course, it doesn't directly impact Indian other stocks in the sense benefit other stocks, but of course, more focus will be on domestic bound thing. So, India being India, we would many times we would like to boycott other things and we'll say, look within India and buy Indian stuff, buy Indian products, kind of thing.
Correct.
So maybe inbound tourism is more, people will avoid going to US and because there is a lot of there's no clarity right now on many things in US.
Hmm.
So anything to do with domestic consumption, I think, can take a big, leap from here.
Interesting. And zooming out on a macro level, how do you think it will impact factors like inflation and interest rate in short to medium term? What's your view there?
So it doesn't impact inflation much because exports anyway has not been India's strong point compared
Hmm.
to China. And so to our share to US is hardly anything in the whole scheme of things. So I don't, of course, only those companies are directly impacted who are exporting a lot of their some to products to US. But by and large, I don't see, in fact, on the contrary, inflation is going to go up in US because if they have put tariffs on all other countries, it will it can take 6 months time, but US will have a rough phase as far as inflation is concerned, and the interest rates won't come down. So it is going to hit them badly. India is just doing fine. I'm not seeing any problems on the inflation side. Of course, RBI is watching all the actions, but we are not worried at this stage.
Got it. Got it. And I think in this light of all the geopolitical turbulence that's happening, do you think an investor like you and I, a retail investor, should also think about diversifying outside India? In global, taking exposure in global mutual funds or international equity. Do you think that's a wise decision for a retail investor?
Yeah, it is certainly. See, because today in our life also we are spending a lot of items on the stuff which are not made in India or made by Indian companies. We are using a lot of American products and global products for that to that extent. So, in a normal scheme of things, you should definitely invest in global funds as well. But see, again, you have to do asset allocation and you have to rebalance, which means you have to buy stuff that has not really worked well.
Hmm.
US markets. So lot of Indian investors, of course, we export to US and we import a lot from US, but in the last 5 years, we have invested a lot of money in US markets post-COVID, most of investors. But frankly speaking, today, if I were to do it, I'm not very enthusiastic about US markets right now because US markets, are at all-time high of in the sense market cap in the world. So they
Hmm.
currently are 65-70% of the world market cap,
Right.
right? It's like never ever it has been at this high levels.
Hmm.
So market always correct, revert to mean.
Hmm.
Another thing is for 15 years, markets are on a one-way stream post 2008 global financial crisis.
Hmm.
Just barring a few months in COVID, markets have been always doing well. Corporate profits are all-time high in America again. So
Hmm.
all these things point out to a cyclical thing that if cycle turns bad, which it will, and this, I think we were waiting for a reason. I think this is a good enough reason right now, I
Hmm.
believe. All these policies that we are seeing, it is going to hurt American economy far more than any other economy because now America has virtually created kind of enemies out of their friends,
True.
allies, right? Whether it is India or Canada or Mexico
Hmm.
or EU. So no one will be now relying on US for a lot of things. So they will be independently developing their own defense and whatever, tech. I think that's a big thing, big problem for America. Okay.
Hmm.
So at this stage, I wouldn't be putting my money in US for sure right now.
Okay.
Even Warren Buffett is sitting on $350 trillion cash.
Hmm.
He also feels that markets are very expensive.
So,
And your past returns indicate this, right? Last 1 year, 3 year, 5 year, look at NASDAQ and S&P, they are through the roof. The
hmm.
party cannot run forever like this.
Fair.
So
Then what?
someone like me, yeah, I'm doing maybe emerging markets right now.
Okay.
So see, you can divide the world into two halves, developed markets, emerging markets.
Hmm.
So 2000 to 2008, 9, emerging markets were on a roll.
Hmm.
US market had bad phase.
Hmm.
Okay. And then 2009 onwards to 2025, US markets and developed markets were on tier. Emerging markets were very kind of, performing badly. I think next decade somehow I feel belongs to emerging markets again. Dollar is going to weaken, which is great news for emerging markets.
Yeah.
So I'm putting a lot of my money in emerging markets, particularly in China. But China being China, it can be very volatile, unlike US, and it can take 4 5 years of patience. 4 years, nothing happens, and 1 year you get 200%. The average looks wow, good 18%, but it's very painful to hold for the first 4 years then.
Fair. Fair. And I think a very solid prediction made here. But I have a slightly contrarian view, and I want your opinion here. I think US became US on the ride of the internet, the technology, right? When the Google and Microsoft and all of these companies were formed. And now, as you know, it's being predicted, AI is the future, and a lot of AI and high tech is happening there in the US. Do you think? India is maybe lagging behind in the AI race, and how do you see the next decade becoming India and the emerging markets decade if we are not capturing on the AI wave? What's your view?
No, I completely agree with you. See, in the last 15, 20 years, because we thought US was our ally, right?
Hmm.
We would happily buy everything from them and not develop, and we would export our people also to them, the best
Right.
talent, right? But I think now I'm sure Indian political system is taking notice of this change in the behavior and everything. We wouldn't be relying on anybody for that matter now. You know,
Hmm.
the geopolitics political situation has changed. I'm sure the think tank in India is now working that we can't depend on anyone for now. We can't take anyone for granted. Let's develop our indigenous stuff. And so in next 10, 15 years, we'll try to look within, whether it is talent and whether it is resources and everything. I think this is a great eye opener in my sense. It's a wake up call for all of us.
Hmm.
You know, Prime Minister Modi has been saying for the last 5 years about Atmanirbhar Bharat. I think it's time that we really take this seriously on all counts, whether it is our talent, R&D and stuff, develop our own thing. I'm sure if we are able to pull this off, just like China did, with its own deep sea and tech and other things,
Hmm.
I think it will take time because if you're starting today, it will take 10, 15 years. At least our future generations will have a more secure future than what we are seeing right now. Because right now you are practically dependent on everything on US for tech and other things.
Right.
And
Right.
anybody can take you for a ride by this thing. And just look at the headlines yesterday. They're not even willing to discuss also. I mean, it's
Yeah.
like at a gunpoint. You're kept at a gunpoint kind of thing, and you never thought this would happen. And we all vouch. I'm that okay. He's pro-friendly India kind of thing, but I've realized that anything can change anytime.
True.
So
I
I
think
agree with you that
yeah, I was reading
Indian,
25 years of diplomatic relations are like getting
correct?
turned over
Yeah.
to this.
Yes.
Uh,
Exactly.
the
But
entire generation has like been there sourced out to US for the IT
correct.
and built there, and now this. So I think Gajendra, lots of points we discussed here, and I'll just summarize. So number one is of course the Indian reliance on export is to US is limited. So market as a whole will not get that impacted as the news seem to be. I think that is one big
Right.
takeaway that is there. Second, for a retail investor like you and me, we should rather take advantage of the opportunity and not worry. I think last note and my last question to you would be, if we see markets dipping in the short or medium term, is there certain segments that we should take position in? It could be categories, large, mid, small cap, or certain themes or sectors. Is there certain places where we should be on a lookout for?
Yeah. So one thing I've realized that many people, of course, yesterday again we saw another headline that gold is now 1,05,000
Hmm.
and people are flocking to gold also. Gold has of course done very well. In times of crisis like these or uncertainty like this, gold will certainly do very well. So a lot of people have over the last 1 year and now are going aggressive. Again, as an investor, I would be very cautious about this right now for gold. Uh, and my contrarian mind tells me that anything that has gone done too well in the recent past is bound
Hmm.
to have a weaker future. So again, I'm not enthusiastic about gold. I don't have any exposure to gold. When I look in hindsight, the best time to buy gold was like 4, 5 years back when because from 2011 to 2019, gold did not go anywhere.
Hmm.
So if somebody would have bought 4, 5 years back, then yes, you can continue. But so again, if you are investing in multi-asset fund, so for a lot of investors, my suggestion would be just put your money in a multi-asset fund. And by the way, in multi-asset fund, Navda, what happens? The fund manager has option to put in 4, 5 asset classes, including Indian equities, Indian bonds, okay,
Hmm.
gold, silver, and international equities also.
Okay.
So you don't have to do any juggling. You don't have to worry about what should I do or not. maybe good 25, 30, 40% of your core portfolio should go into multi-asset fund. For many conservative investors who are happy with 10 to 12% kind of return in the long term,
Mhm.
don't are very nervous about volatility. But fresh allocation in gold funds, I would avoid right now at this stage. Uh, and in sectors wise, I'll keep a watch on all the mid cap, large cap, small cap, and any sector position. Somebody like me would invest money if any particular sector has taken a huge beating because of this. Uh,
Okay.
okay, I would keep my eyes on all export related sectors also, or pharma or IT and everything. Whichever sector has taken the most beating uh, over next 1 to 3 months, uh, then what I do, I connect to the fund managers also. It's not that I just look at the numbers.
Mhm.
I connect to fund managers, seek their view, and if their view also echoes my own reading, then I go and aggressive and maybe put money in those sector funds accordingly. But things can change very fast.
Hmm.
Imagine tomorrow if he announces on pharma and IT, then overnight you can see all red around them.
Yeah.
So
But you think that trade is an opportunity
it
because
is
markets
always.
will rebound and figure out a way.
See, yeah, it will always figure it out a way. Human, I always have a faith in the future. I always have faith in human ingenuity. We'll always find a solution around a problem. So if we could come out of 1991 crisis when India was like almost bankrupt, I think we are in a much stronger wicket right now. So no real big reason to worry.
Yeah. No, I think perfect note to end this conversation, Gajendra. I think thank you so much for sharing all of these valuable learnings. Thank you so much for taking out the time.
Pleasure. Thank you so much for having me.